Welcome back, and if you haven't watched part 1 yet, I recommend starting there. We cover what Dubai Islands actually is, why the density story matters, and how each of the 5 islands sits in a completely different investment category. In this part, we're gonna get into the data, pricing benchmark, capital appreciation, developer quality, and the honest answer to whether the opportunity that existed in 2022 still exists today. Let's get into it.
One of the most important things to understand about Dubai Islands is that the 5 islands are not interchangeable. Island A is the largest, over 500 hectares, and the most urban of the 5. It carries the highest residential volume and will house the primary retail and commercial infrastructure. It's designed to be activated, connected, accessible heart of the development. High residential supply means stronger liquidity, but also means more competition in the rental market over time. Island B is where the most development activity is concentrated right now, and where the investment thesis is clearest. 323 hectares, 45 hotels, but only 6,000 residential units. The ratio of hotel infrastructure to residential supply creates a resort ecosystem. Beach clubs, restaurants, spas, that drive short-lead demand once the properties complete and tourism mature. The Blue Flag certification, which Island B Beaches receives in late 2023, is a genuine quality indicator. Island C is the Oasis Island, the largest at nearly 800 hectares, and with 18-hole championship golf course, with 4 resort properties and around 640 villas, very low density, low time horizon. It's a play on Dubai ultra-luxury lifestyle future, not a near-term income strategy. Island D follow a similar model at smaller scale, a sport community club environment, 9-hole golf, 300 villas, and then there is Island E. 99 hectares, 0 hotels, no commercial development, 83 villas, with a private marina and a members-only golf club. Island E is in a category of its own. Treating Dubai Islands as a single homogeneous market would be a significant mistake. Let's look at the market's data, because this is where investors' lens need to be clear-eyed. The reference benchmark for Island B pricing is Bay Grove Residential, Nakhil's own project, launched in 2023 at around 2,200 per square foot. By Q1 2026, this same project was trading at close to 3,000 per square foot. On secondary market, that is 33% capital appreciation over approximately 2.5 years in the off-plan phase. Dubai Islands is earlier in its infrastructure, delivering ARC, which is precisely where the remaining opportunity sits and precisely where the risk sits. Active Island B projects as early as 2026 and priced at 3,400 dirhams to 4,000 dirhams per square foot for premium products. Off-plan transaction volumes exceeds 4,000 transactions in 2025, approximately 4 times the volume of the prior year. That is a market that has moved from early adoption to mainstream investment awareness. For the investors entering today, what you are getting is close to location whose infrastructure is now contractually committed, whose anchor hotels are operating within the year, and whose long-term pricing ceiling, if Dubai Islands achieve that profile of a mature beachfront destination, remains significantly above today's entering points. Whether the ceiling is reached in 5 years or 10 years, depending on infrastructure, delivering tourism growth and macro conditions. What I would say is that the structure argument, scarce beachfront, government mandate, resort density tourism infrastructure remains intact. Development quality matters more in emerging locations than in established ones. In an area like downtown, the location carries the product. In a location like Dubai Islands, which is still established itself, the quality and credibility of the developer is meaningful. Factors in futures, resale value and rental premium. The master developer Nakil brings government-grade certainty to infrastructure and planning framework. The project's foundation, in the most literal sense, are not going anywhere. Then there are the volume developers, high-output mid-market developers who have launched significant quantities of units across the island. These projects are not inherently inferior investments, but they compete on price rather than product differentiation. The takeaway from investors is simple: be selective. Not all projects on Dubai Island carry the same risk-reward profile. Developer credibility, project positioning, and design quality are as important as price per square foot. Let me bring you back to the question I opened with. How long are you prepared to wait? Do you understand what kind of asset you're buying, and what does your timeline and your financial position allow you to hold through the period before it matures? Some locations generate immediate income. They have the infrastructure, the tenants, and the track record to produce yield from the first year. If that is your priority, Dubai Islands is not yet the location. Scarce location with strong government-backed development momentum, acquired before the infrastructure fully arrives, and held through to the point where the location has established itself on its own terms. Think about the people who bought on the palms 15 years ago. The investors who do well in those situations are really the ones chasing yield in year one. They are the ones who understood scarcity, trusted the government mandate, assessed the development quality, and were patient. Dubai Islands is asking investors to make a similar calculation today. The beachfront is real. The government commitment is real. The low density, particularly on Island B and the Southern Island, is a planned decision that will translate into scarcity over time. What remains to be proven by the location itself is delivery. And that proof will come in form of key handed over, hotels opening, bridges completing, and families choosing to live here because the lifestyle is worth it. My role is not here to tell you that it will happen. My role is here to help you understand the full picture and opportunity and the risk so you can make a right decision for your situation. If Dubai Island matches your investment profile, I'd welcome a conversation. If it doesn't, there are other locations in the market worth understanding, and I can guide you through those. Either way, invest with clarity, invest with patience, and invest in scarcity. Safeguarding your assets, grounded in experience. Let's work together.